Look, man don't lie, man spit rhymes. T2 step then the next shot.
I hope everyone's doing well. Welcome back to another lesson. So, today's lesson is going to be quite different to what you guys have got so far in the mentorship, right? This lesson is going to be covering purely psychology and some aspects outside of that, but sort of the aspects away from trading that will contribute, towards our trading and make us better as traders in general, right? So let's get into it. So generally, right, first of all, what is trading psychology? Why is there trading psychology? Now, most of you guys who are on this episode now of the mentorship, right, as we approach the last couple, I'd assume you've been on the charts, you've taken trades. Some of you might have even, gone on actual funded accounts, live accounts, used real money. And trading psychology affects you, right? When you're in a trade and sometimes, it's nearing your stop loss and you think, should I move my stop loss? It's nearing your take profit. Oh, should I extend my take profit? You went into that trade with a plan, and now that plan starts to sort of crumble when price reaches either of those destinations, or even price comes back to break even and you think, oh, maybe I should just close it here, right? Those are all things that they're thoughts that cross your mind that are not objective. They're usually emotionally fueled. You don't really have a reason to be doing these things, but something in your brain just says it. And that's just, how humans are. Humans make money, they fumble money. It's all over history, right? Now, trading psychology is such a big thing because the second point you guys can see are technicals versus psychology and profit, right? What does that mean? Now, technicals, when somebody is coming into trading, they're learning trading, they think the technicals is the hard part. It's not. Guys, anybody can learn the technicals. Every single episode I've put out thus far, somebody can go watch all of this, learn it inside out. Some people might do it in 3-4 months. Some people might take, 6, 7, 8, whatever, however long. That's subjective. But anyone can do that. Overcoming the psychology, from my experience, is where I see a lot of people fail. That's what they truly struggle with. They know what they should be doing, but still they don't. Right? And then, of course, that stops you from progressing. You can have all the technicals, and once you learn the technicals, now you have a plan. You know what you need to do. You know what you need to do to make money, to get funded, whatever. But what can stop you from that? Your own emotions and psychology, right? Because where did they kick in? They kick in when you're not following your plan. And usually what happens is, if you deviate from your plan once, you deviate from what you were meant to do, it's very likely that you will do that again. And when I say this, I'm speaking from experience, right? A good example is I used to limit myself to a 1% loss when I first sort of made a trading plan and stuff. I said 1 loss a day, 1%, that's it. And then sometimes what I'll do is, I took a loss and I'll be like, oh, I have to go back in. I've seen a trade. I think I've seen a trade, but I just tell myself, yeah, this is going to be a good trade. I'm going to make back my loss. I'll be in profit, go back in. Now I'm 2% down. You see, I've already opened that door for me to now go ahead and make more mistakes. Now I'm 2% down. I'm feeling more pressured. I'm thinking, yeah, I have to somehow make this 2% back or I'm done. But you're not. And we'll talk about that, right? Like I said, short term versus long term. There's two main aspects to psychology. And the short term is much more chart based, like some of the examples I was just talking about. And the long term isn't even, necessarily trading based. So we'll start off with that. Now, cool. The bigger picture, right? The bigger picture in trading. Let's just take a step back from everything we talk about. Let's not even think about the charts for a second. Every single one of you watching this, right? And I'm hoping you would have watched every single episode to get to this one first of all. It shows a level of dedication, and you're here to achieve something, and you want to do something. You're here to learn something, right? Very good. But with trading, that's it's not all you want to look at. What else do you want to achieve from trading? Right? For people, it's very easy to say, oh, I want to make a lot of money, but I want trading to then go ahead and buy this, buy that. Okay, cool. That can be part of what you want. But when we're talking about long-term trading, you need a sort of plan and a vision. And when I say a plan and a vision, it needs to be specific. Now, a lot of you guys are from the UK. Apologies if you can hear my cat in the back. A lot of you guys are from the UK, especially in the mentorship, right? And you probably learned in school something called SMART, when they used to do SMART goal setting, right? Specific, measurable, achievable, recordable, and timed. Now, in school, this stuff seemed very cliche, right? They used to teach us in PE. Now, with these terms that they sort of taught us, right? The 5 terms, that's something you need to actually apply, right? You have to think about when you're doing this sort of goal setting, and a lot of people probably, people listening right now probably don't even do goal setting. But how much easier is it to work towards something when you have it all written out, right? Let me give you a good example. If, for example, right, let's say in the gym, a lot of people go to the gym, a lot of people train. Let's say I want to increase my bench by, I don't know, 10 kg, right? And I write out a program for 6 weeks, right? And this program, whatever it is, maybe you picked it up off the internet, maybe you made your own, and you make a plan to hit that target by the end of the 6 weeks, right? And let's say currently, I don't know, I bench like 100 and I want to bench 110 now, right? And each week in increments, I slowly try and bench more. Each week I try and add, maybe a 1 kg or 2 kg or whatever, and slowly build towards that goal. And then the week before, we sort of we drop down the weight so we get a bit of rest, and we go hard on like the 6th week to hit that final target, right? So what's the point of all of this? The point is, see how organized you can be with your goals, because I'm here, here's my goal, right? There's a finish line. And once you start that process, that track process, then you know where you are in your journey, what's left to do, what you need to do. Now, let's compare it to another person. Somebody else in the gym might say the same thing. Oh, I want to add 10 kg to my bench. Guess what? They literally go into the gym, next session, they put another 10 kg on their bench and try to bench it, and they fail. They think, oh, I can't do this. The next week, they just go back to the normal. Then they just bench their normal couple weeks. Then they're like, okay, cool, I'm ready to try again. I want to put 10 kg on. They try. Then probably fail again. You see how that's small, when you're adding those little 1 kgs over time, right? It might not feel heavy when you're doing them, but see how they can add up. It's very similar to trading. Some of you already probably know what I'm talking about. Versus if one day you suddenly just try to slap on 10 kg onto your bench, it is probably not moving, right? So you have to be very, very calculated with these things. And then, like I said, a lot of people listening probably aren't. It's, it's not a horrible thing, but it's a game changer, especially if you're in my mentorship. Of course, I know this will be on the YouTube, everyone's listening to it, but especially if you're in the mentorship, I would very, very heavily advise you to, sort of get goals written down. It doesn't even necessarily have to be trading related, but anything, and make sure there's a way you can track your progress. Because now imagine you hit the end of that 6 weeks. You've either not hit your goal, you've hit your goal, or you surpassed it. That's only the really 3 things that can happen, right? And depending on what's happened, you reevaluate, you create a new plan, and you plan for the future, right? It's repeat. It's just rinse and repeat. It's the same process again and again. Now, when I'm saying long term, it's similar with trading, right? Of course, let's take it in the aspect of funded accounts. To pass a funded, it will always take you a certain amount of time, right? This is very contextual. It's dependent on the market. Sometimes the market gives you more opportunities than others. But most fundeds, let's just go with generally, you have to do 5 days minimum phase 1, 5 days minimum phase 2, right? And then you can go live. Now, you already know that's 2 weeks minimum before you can, pass a funding most of the time. And guys, I know there's a lot of prop firms that do no time limits, blah, blah, blah. But let's just, put that aside. Realistically, it will probably take you 2 weeks, maybe a little bit longer to pass a funded. If, you're just, let's just say, a normal trader. You're not on the charts constantly. Now, when you know that, right, and you have a goal in terms of funding, I want to hit X amount of funding, and you want to build up to that, right, you're going to have to plan that out. You have to understand it's a process. Now, what most people do, understandably, right, is start trading, probably see a bit of return, probably, feel confident, and instantly tell themselves, yeah, that's it. In 2 months, I'm going to be 1 million funded. Go for it. I hope people can achieve that if they, wish for it, but it's just not realistic, guys. Now, it's the same thing, right? Let's take it back to the gym, and there probably will be a lot more gym examples. I'm big on the gym, and a big example would be, right, if someone's just walked into the gym, someone relatively new, right, they've just learnt the basics, they're getting a bit comfortable, and they go ahead and think, oh, okay, I've deadlifted 100 kg, I'm ready to deadlift 200. If any of you have been to the gym, you know that is not happening. You are not going from 100 to 100. With your funded accounts, it's very similar, right? I'm not saying it's impossible, right? With funded accounts, of course, it's slightly different. It's not impossible. You could go from a 10k account to instantly buying a 400k account and passing it. But most likely, what most people do, and it's necessary, is to go in increments, right? The same way in the gym, you handle a weight, then you get stronger, and then you handle a slightly bigger weight, right? You don't just double, triple that weight instantly. Handle a slightly bigger weight, then slightly bigger, and you see how it improves. And that's how it works with the trading. Or ideally, I think it should, because it's about psychology again. That's the main thing we're talking about here, right? Handling a 5k account and a 10k account will probably feel a lot easier to most people than handling a 500k account if they're a new trader, right? Obviously, because there's a lot less money on the line. Seeing minus $100 as your 1% will not rattle your psychology, but seeing minus 5k might make someone feel some sort of way, especially if you're not conditioned or used to that, right? Now, I know somebody listening to this may argue, oh, it's just percentages. Just see everything as percentages. I agree. You should see everything as percentages. But at the end of the day, it's not that simple. We can say that, but it's not that simple. The way your brain and your mind registers these things will have an impact on how you trade, for the better or the worse, right? So cool. Talk about goals, achievements, and now lastly, progression. Now, the big reason I say, I already touched on it slightly, but in terms of progression in general, right? Of course, I spoke about building capital and of course weights in the gym, whatever. Progression in general, you should just be looking to improve. Now, remember when I said, oh, what if you make a 6-week program for this bench press for whoever, right? What if you reach the end of that 6 weeks and you haven't hit your goal, right? Then you have to sit there and reevaluate. Maybe you were being unrealistic. Maybe you wanted to push too hard in a small amount of time. Maybe you're just not at that level yet. That's not a bad thing. That's something you're learning from. And now when you plan for the future, when you plan for the next 6 weeks, 8 weeks, whatever, you can plan accordingly, right? Because what you want to do is set tasks that are achievable. Now, me personally, I'm quite an ambitious person, right? I tend to set out tasks that, are, quite far or quite hard to achieve. Now, if I achieve them, I will feel very, very good because I knew it was hard to achieve. But on the flip side of the coin, what can also happen is if you set yourself goals and you're unable to achieve these goals, you may not feel good about it. If you don't feel good about it right now, coming back to trading, right, that can affect your trading. Imagine you told yourself, oh, I want to make 10,000 by the end of this quarter in profit. And you've hit 9,000. And you're still happy, of course, you made 9,000. But what if you push too hard to try to get that last 1,000? Maybe there was no good setup, but you're thinking, oh, I still want to hit that target I set out for myself. It's things like that, right? And of course, that's just one example. There's so many examples you can apply to. But setting goals that are realistic and understanding things take time. And you guys probably all heard this example. Most people say people come into trading, they want to become a millionaire in like a year, right? But when they go uni for 3 years and they study, they don't really think, oh, I'm here for 3 years. You have to treat trading as such. It's a full subject, right? It's a whole industry. You can't go into any industry and become a sort of master or very fluent in it within a year. Now, again, it's not impossible if you sit there and, you literally spend hours on hours on hours every single day for a whole year and you make it your whole life. Of course, then, But there's certain things that only experience can teach. You can cover technical so much. You can do so much back testing. But when you're forward testing and you're doing these demos and these live accounts, we're all on the same clock. You can't make time go faster. You can't gain, experience faster. There's certain things that you will only experience in lifetime that will happen as they come, right? That's why it's important to consider the future as a whole and plan accordingly. Now, one more thing before we move on to the next thing I would also like to say is this whole idea of progression is so important. If you don't have a plan, right, a lot of people, they might just end up in the same position they are in now in 3 months' time because they didn't have a plan. When you have a plan, you have everything laid out step by step and you know what you want to do. And when we talk about plan, right, you should have a plan for the short term, the mid term, and the long term. You should have a sort of, the 5-year plan can be very obscure. You don't have to have a step by step ladder of, oh, how am I going to get to this spot in 5 years. But in 5 years, you should be, you should be ambitious. You should be saying, oh, I want X amount in funding. I want, maybe you want to run a business, whatever it is. It's subjective to everyone. Then you should have a sort of 1 year plan, right? 1 year plan is always good. And then even below that, I think you should have a plan for the next month, maybe 2 months, 3 months, however much, right? Depending on what your goals are, of course, again, it will be subjective. But it's very important because this is how you gauge things. Let's say you have a yearly plan, right? That yearly plan helps you work towards your 5-year plan, right? But it all comes back down to small bricks. You lay it brick by brick to build a house, right? So what I'm saying here is you have this, let's say, 6-week plan and you aim to achieve something. And these 6 weeks will add up. 6 weeks, 6 weeks, how many ever until you hit a year. So you have to make sure right now, imagine you went through a 6-week period and you're like, I didn't achieve my goals. Then you might need to go a little harder in the next 6 weeks to make sure you hit that yearly target. Imagine the year finished and now you're like, oh, you know what? I didn't go hard enough this year. Next year I need to go harder to make up for it so I can actually achieve my 5-year goal. What if you went over and beyond? Maybe then you need to start thinking of a bigger 5-year goal. You see how you can reevaluate these things and constantly get better and better. You get better at everything, you can refine. But yeah, that's everything for the bigger picture, right? Now, in terms of setting up your environment, what do I mean by this? How do we supplement this thought process? So what I'm getting at here, right? This constant progression, this idea of just always improving. You can't just improve in trading, guys. That's not how life works, right? Everything in your life cannot remain the same and trading somehow gets better. There will be a shift of equal magnitude in other aspects of your life. And that's necessary. Now, me, like I said, and now you guys can already tell I'm a big gym person, right? But why? Why am I a gym person? Now, look, I've been going to the gym for years. And what do I do in the gym? It's the same stuff over and over and over again. And I'm just trying to get better incrementally over time. How does that tie into trading, right? Is trading not the same stuff over and over and over again? You have a model, you have a setup, you just wait for it to appear, then you engage when you're ready, right? Now, I've written routine. Routine is very, very important. Let's get specific into trading now, yeah? When I've built this mentorship, I've told you guys, you have to sort of create a model, a plan that's very subjective, that's specific to you. Now, I've always said I like to trade New York, right? I don't like waking up early. I don't want to wake up for London. I don't feel like I'm working at my optimal when I wake up for London and trade. Therefore, I choose to trade New York or London close kill zone, right? So already I have a time aspect of my routine. When am I trading? But outside of trading, you also need a routine, right? And of course, within trading, within actual, when you're in the charts, you also probably have a routine of something along the lines of, oh, let's calculate the ADR. Let's look at the CBDR. Let's, mark X, Y, Z, whatever. Go through this, go through that. That's your routine on the charts. Very important to have that. But I think we've covered it enough times where I don't have to go over those specifics in this episode. Now, with, generally having a routine outside of trading, how will it carry over? Now, trading requires discipline. And like I said, it's very methodical, it's step by step. But you need that approach in other things in your life as well, right? Or I think it supplements it. I don't think it's 100% necessary, or you have to have a routine in everything you do. But if you do have a routine in everything you do, it'll be much easier to maintain that routine in trading, right? Just makes sense. Now, for me, that routine comes from gym. I'm a very boring person. I just do almost the same things every single day. I eat the same foods at the same time. I wake up at the same time. I try and get the same things done. Now, what's interesting is that humans are actually creatures of habit. And talking from a sort of scientific aspect, humans work optimally when you're sleeping at the same time, you're waking up at the same time, you're doing the same things at the same time, when you have these habits built into your routine. A very, very good episode for this is something called Human Lab. So it's a podcast to watch. First of all, he talks about biohacking, ways to sort of use your biology, your body's let's say features, to optimize them, optimize your performance and your capabilities. What I will do is link this below, right? And I'll send you guys the podcast. I listen to that podcast almost every single day without fail, because there's so much to learn. It's something I recommend everybody watches, because every single thing I mentioned today, he touches on that in much more depth, right? Goal setting, targets, even performance, if any of you guys are athletes, right? But anyways, I'm not doing a marketing show for Human, but cool. So having that routine already helps you stay in that sort of swing, work optimally, because you're doing the same things at the same time. So now your brain sort of becomes accustomed to that. You know when you need this sort of focus for trading, you know when you need this sort of focus and energy for gym, and your body, you know, it automatically becomes used to that, and it just helps you to perform at a good level every single day, right? Now, I want to speak about like health, physical and mental, right? So what I mean by this is, now, physical health and stuff, just this is all optional. Well, not necessarily optional, but it's really up to you. Now, I speak about the gym a lot. You guys might not be interested in the gym. You might just like biking. You might like swimming, anything. But that's fine. Any physical exercise activity, right? Anything that you're involved in that sense will always require some sort of discipline. And that discipline is what's necessary, because it teaches you lessons and it gives you things you can carry over to trading. You know, like I said, like, you know, sort of examples I was giving up earlier. With gym, yeah, if I lift a certain amount and I suddenly want to double my weight, is it going to happen? No. It's the same with trading, right? If, you know, you're making certain returns, can you just double your returns in one day? No. But in due time, you can, as long as you work towards that, right? You can't make it happen in a week, but you can probably make it happen over the span of the next 5-6 months, maybe, right? So it's just about seeing those things. And when you learn those lessons from the gym, when you experience it firsthand, I think that's the big thing here. When you experience these lessons, these universal lessons that exist in, you know, several different aspects of our lives, then you find it easy to apply them to the others. Because these things that I'm telling you guys, these are sort of affirmations I've told myself in the past when I've been trading, when I've wanted to rush things, and told myself, you know what? I don't need to rush. I just need to follow the plan, and the improvements, the returns, they'll get better by themselves, right? Now, self-awareness. Massive, massive thing for trading, but life in general. Now, everything I've spoken about today is so subjective. You might be listening to this and hearing my gym stories and thinking, you know, what the hell? I don't even like the gym. That's fine, right? Self-awareness is important. You have to understand what you like, what works for you, what doesn't work for you. Even in making your plan, I was talking about, I trade New York. Why? I literally told you guys, if I wake up early, I know I don't work optimally, right? I prefer to sleep in a little later, wake up, then go about my routine, right? Because I've understood that's what works for me. I'm self-aware to be able to understand what's sort of detrimental and what's actually, you know, good for me. Now, you have to do the same. You have to sit there. I feel like a lot of people don't do this, but in all aspects, again, right, you have to understand where your weaknesses are, where your strengths are, what you need to work on, and what you need to use to your advantage. And these are genuine conversations you have to have with yourself. You have to, you know, actually do a bit of self-analysis and understand. And, you know, sort of maybe, you understand you're a trader that's quite impulsive. So you limit your chart time. You make sure you're only on the charts for one session. I know a lot of people are on the charts for like 10 hours in a day. I don't think that's how it should be done. Of course, you know, somebody's profitable off that, so then you can't really knock it, but you have to find out what works for you, right? Now, leading on from that self-awareness, that in itself is a very big point. Trial and error. How do you know what works for you? Trial and error. You have to try a lot of new things till they work for you. Like I said, how would I have known that London session isn't good for me if I didn't trade it enough times and probably fall on my face? Another big thing is, you know, data collection. Trading specifically data collection. Now, you know, of course, there's videos out on this I've shown you guys, and in those videos I explain how you can use this data collection. But if you're unsure of where your performance is worse or better, the data collection, this is tangible information. This is real life data that is giving you results and telling you, oh, your win rate in New York is X. Your win rate in London is. Did you get it? So you can use that data to your advantage and now understand, okay, my win rate in London is a lot higher than New York. So maybe I'll just stick to trading London and I'll leave out New York, right? Because I'm taking more losses there. And with trading, you guys will realize less is more, right? Once you have the right amount of capital, once you've been compounding, right? You understand you don't need a lot of percent. You just need to wait for the right moves. And once you have, you've made, at one point, hopefully, you'll have the capital where even 1% is enough for you to be able to happily close a trade. A lot of people now, they sit in positions where they've got a small account and they try and milk that account, try and make 15-20%. That's not very sustainable because you won't be able to keep that up. The point is you should be aiming to make those small percentages, right? Because you know it's repeatable, and that is what you want to do when you have a big account. That's not how it works. It's not on this account I'll make 10% each month, but when I have a big account I'll go back to making 1%. That is not how trading works. You have to start as you plan to go on. That's just how it is. You have to instill those habits at the start and they will serve you well later, right? Now, dealing with setbacks. Trading is very difficult, guys. Very, very difficult mentally. When you take losses, when you go through a hard period, do not beat yourself up about it. It happens to every single person. It's just about how you move forward. One thing I always say to people, that come to me if they're struggling, they find it difficult, you cannot change the past, right? What's happened? You've lost a lot of money, you've taken an L, you've blown an account. You cannot change it. You can't go back, reverse it. Of course, now you might be stressed about it, but you need to stop stressing and you start learning from it. Where did you go wrong? What mistakes did you make? Are you going to make them again? Once you feel that pain, you don't want to feel that pain again. So make sure you don't feel that pain again by repeating those mistakes, right? Make sure you write down, even, literally write down on a post-it in front of your trading desk, your laptop, whatever it is. Write down the mistakes you made. Make them visible to yourself so you do not do the same things again and go through the same pain. You guys have probably seen a lot of, I see traders mention this on Twitter and stuff. And it's so true. They'll say, breaking your plan and, getting a good result, meaning you went against your plan, right? Maybe you over-risked, maybe you over-traded, and then you made a good return, is actually a lot worse than taking a loss. Why? It feeds into that bias. You can now do that again. You've just opened that door a little bit, and now it's showing you the possibility of, if I do this again, I can make even more money. That's not, your plan, your trading plan. If you backtested it, objectively, you have data saying this plan wins X% of the time, blah, blah, blah. You have all the ins and outs. Why would you go against that? When you go against it, you add these other variables. Now, you're essentially setting yourself up for failure. Because if that, do you know what it is? I say to a lot of people, please don't go against your plan. Because if you take a loss, right, you were not meant to go against your plan. So what can you learn from that? You can't learn anything, right? You already knew you just done something you weren't meant to. So you have to make sure you're sticking to those plans you lay out for yourself. And of course, the process of making those plans in itself is a whole other topic. Again, like I said, it's already been covered. But, you make ones that are effective and apply well to you. And therefore, it should make it easier for you to stick to them. However, you will still always get impulses when you're sort of trading. If you take a loss, stuff like that. And you have to know how to, combat that. Now, breaks in trading. The next point, right, ties into this quite well. Now, breaks in trading, there's short-term and long-term, breaks we can take. And it can be so short-term as like, okay, cool, let's assume I traded London today and I took a loss. If I take a loss in a session, I do not attempt to re-enter in that session. My personal risk management protocol limits my losses to 1.5% a day. So how do I do it? I will take a good setup, right? And I will risk 1%. For me to even risk 1%, it has to be a good setup, right? I won't just enter the market. It has to be according to my plan, whatever. However, of course, you can still lose. You might have a bad read on price, whatever it is. Let's assume I've lost. If I lost the trade, I will potentially re-enter the market, but only again if my criteria is met. I don't go back in the market in the hopes of making back what I lost today. I go back in the market. It's like a clean slate. You go back in and you're just trading, right? You're just trading with a clean slate. Are your boxes ticked? Does this trade make sense to take? You're not factoring in that loss you took earlier. But now, right, being realistic, we do have to factor in that loss. Not from a technical perspective. We don't think, oh, I lost a trade early, I need to hold it. Like, I need to hold this trade to a 3R TP, even though the liquidity pool is at 2R. No, that's not what you do. So now you know you've taken a loss. What I do is limit my risk. My second trade, first, has to be in a different session. So if I trade in London, then it will be in New York. And this time I will risk 0.5% and typically aim for a take profit that's at or close to 2R. Now that helps me make back the loss that, I took earlier, and then I can just, essentially end the day at break even. And that's much more helpful for my psychology going into the next day, because now I don't have the stress of drawdown. Now, in terms of breaks, just generally, even bigger breaks, right? So this is just session to session. That's all my risk management protocol. You guys just got there. Sometimes you have to take a big break from trading. Sometimes you might be going on a tilt. You're being super impulsive. Maybe things in, sort of away from the charts in real life are very stressful. It's impacting you. Take a break. When you're going through an emotional, impulsive phase, it is very, very, very easy to dig a hole for yourself. If you are a funded trader, right, and you have a live account, please do not put that at risk. Because once you blow that, you have to work back to that, and that's hard. Stick to these rules. You need the discipline to stick to these rules and say, oh, this is the max loss today. Even if I see a good opportunity, that's it, that's fine. But you can go back in the market another day. The market is here. The market trades 5 days a week. It will not stop trading 5 days a week. It will carry on like that. Another opportunity will come. And nowadays, thankfully, there's prop firms coming out with no time limits. Prop firms coming out saying no minimum trading days. So you can literally take as long as you need, right? And you'll be fine. You just wait until you have a good setup. You don't have an excuse to be taking very shitty trades and shitty setups if you have a limited time. It doesn't make sense. Why would you even take a bad setup? If you got a limited time, just wait until your model appears. Wait until all your boxes are ticked. It's not like the account's running away, right? There's no rush. The only rush is the rush you're imposing on yourself, that you're forcing yourself to think that you need to do this in a certain amount of time, right? Now, lastly, sort of coming back, just a sort of overview of what we've covered today. Again, I know no charts today, just all psychology, but I hope there's a lot, like I said, to be on this episode, I hope you watched every episode. And through watching those episodes and going on the charts, you've probably collated a good amount of experience now. And a lot of you guys listening can probably resonate with a lot of the things that I'm saying, which is good, right? So I hope you're really taken away from this and understanding most of the stuff I'm saying. You probably already knew this, right? Let's be honest. You know what you should be doing, but you're just struggling to follow that. But I just want you guys to see the importance of following that over a longer period of time, and of course in the short term, right? Now, discipline. Everyone's probably heard the whole discipline motivation argument. Motivation gets you started, discipline keeps you in the game. It's so true, right? When you're super motivated, you might think, oh, I've got a sick trading plan, I'm going to stick to this. But what happens when you take a couple hours? Do you know how easy it is for your mood to shift? This is why trading, it has to be such an objective sport. You have to be so accustomed to not letting your impulses decide what you do. And that's where your discipline kicks in. Following your rules. Like I said, guys, it's as simple as you know what you need to do. You already have it written out. You have a plan. So don't deviate from that. Your routine. Again, discipline ties into this. Your routine. Try keep it, the same stuff again and again. Now, again, like I said, I'll give you guys the links to the Human Lab podcast. When you listen to that podcast and you think about some of the things he says, please try and implement them. Trust me, some of the things he gives in there are life-changing if you truly implement them. There's so many little like protocols and things he teaches. And some of you might think, oh, my sleeping routine's bad, I don't know how to fix it. Everything is in there. I'm telling you now. It's up to you to go listen to it. I know podcasts aren't really everyone's thing, but I've taken a lot from there, and I wouldn't be recommending it firsthand if I hadn't, right? Gains over time and zooming out. Now, one, big aspect to my personal training that sort of changed things for me. When you take a loss on a day, right, you lose 1%. Do you know how easy it is to sort of sit there and feel sorry for yourself or then try and revenge trade that? It's what I just said a few minutes ago. Just zoom out, guys. It's one day in a 5-day week, in a 20-day month, right? 20 trading days in a year. one bad day. So what? You took a 1% loss. Are you not going to make that back the next time you make a 1 to 2? Right? You have to zoom out, guys. You have to see the bigger picture. It's about gains over time. You know, again, coming back to the sort of gym. In the gym, if one day I go in and I can't, if you know, certain days, if you guys do go to the gym, you probably feel a little weaker than usual and you can't lift your normal weights. You probably sit there like, oh, you probably feel a bit sad or upset about it, right? Or even annoyed. But so what? It's one day. Are you not going to come back within a month and probably beat some of your personal records? Right? It's about zooming out. Sometimes it happens. Sometimes you slip up. You have a bad performance. That's fine. But as long as in the bigger picture, right, you're making sure you're in the game. How do you make sure you're in the game? You limit your risk. Right? You have a risk management protocol. You make sure you stay in this game as long as possible and you keep it sustainable. Your idea of winning, right, the last thing I want to touch on, will change over time. With trading, you just have to play the long game. This is why I've put such a big emphasis on it. Because you'll start with a 10k funding and you'll be very happy, right? When you first pass that 10k funding, if it's your first pass, as you should be, right? You really should be. That's good. That's a big achievement. Most people can't pass funded. To then go get a payout and stay funded, that's an even bigger achievement because most people cannot do that, right? And then from there, what will happen to most people, right? And as it happens with achievements in life, your achievements won't feel as big and you'll constantly start thinking, I need a bigger account. I need a 100k account now. I need 200. When you get the 100k, you'll think, I need 200k. When you get 200k. Make sure, again, you zoom out and you look at everything you've done. And remember that thing I said to you guys right at the start. There's a start and there's a finish line. It's like a racetrack. Make sure sometimes you get a bird's eye viewpoint of yourself and look at where you are on that track. Most of you are probably closer to the finish line of getting funded than you are compared to where you started. That means you can't stop. If you're close to the finish line, you can never stop, right? So make sure you guys follow through. Make sure when you have these plans for yourselves, you follow your rules. You don't break your rules because if you do, all you're doing is disappoint yourself. And you play the long game. Just think long term. Guys, even if it takes you 2-3 years to get 1 million funded, will you care when you have that 1 million funded? You won't. You'll think every single minute of your effort and pain was worth it. So make sure you keep yourself in the game long enough to actually see those days. That is it for today's lesson. I hope that helps some of you guys. I did get quite a few people asking for a psychology-based lesson. Hopefully I said all the right things that you guys needed from this lesson and it should help your trading. As usual, any questions, anything you need help with, guys, just drop me a message.